Well, here we go. We got a quick video on Meta. Meta stock is crashing after its Q1 earnings, and its Q1 earnings were absolutely brilliant, and we'll talk about why that is potentially going down in pre-market. Before we do that, I've got another two stocks I want to really quickly speak about, two stocks that I own, and then we'll get on to Meta. So first of all, I want to mention Legal & General really quickly. Having a bit of a dip today, went ex-dividend, and obviously a few people selling out there after the ex-dividend date. But yeah, I think this is obviously looking really interesting because as well as it being like 5% down today, it's had a bit of a rough time recently. Like in the last month, it's down nearly 6%. And you know, you look at the dividend yield on this, I mean, it's 8.6%. I mean, the average S&P return is around about, what, 9% a year? And you're getting nearly the S&P's average return in this dividend stock without any share price appreciation as well, which when we have a recovery in the housing market in the UK economy, there's definitely going to be some share price appreciation coming up, I believe, on Legal & General as well. So yeah, I just think that when you look at Legal & General, you know, I always talk about Legal & General and I always say this is what I'm up, this is what I'm down, but I've owned Legal & General now for like probably 2, 3, maybe even 4 years now. And I always think, like, when I talk about this stock, I should always factor in like what I've received on a dividend point of view as well, because I always say like I'm up 5%, 10% on this, but realistically, in the last kind of 2, 3, 4 years I've been owning this, I've been collecting a massive chunky dividend yield as well, and I probably should factor that in. But it's unbelievable that, you know, on the UK market, sometimes we get these stocks that are offering nearly a 9% dividend yield when that's nearly the average S&P's return. It's probably shouldn't be that high, but it is. So a little bit of a dip on Legal & General today that's definitely interesting. And another UK stock that looks very interesting and very cheap in my opinion is Supreme. Currently trading at 8 times earnings. Now I had to have a quick, also picking up a 3% dividend yield again as well. But trading at 8 times earnings, but I had to quickly have a look at the forward P on this because the profitability is ramping up really quickly on this one. And I had a look at the metrics, and I think on a forward basis now, it's a 6 times forward earnings for this business. Now, if you have a look at the numbers that Supreme just brought out the other day, so impressive. They brought out the year-end trading update, and they said that they reported financial year 24 revenue of around 225 million. For context, last year was 155 million. Yeah, from 155 million up to 225 million. That's crazy, isn't it? Adjusted EBITDA of at least 38 million. Financial year 23 was 19 million. Yeah, EBITDA has just doubled up on this business. And you look at this, like I said, you talk about a company that's currently trading at 8 times earnings. It's currently trading at 6 times forward earnings. It's crazy. It's crazy this stock is at these sort of levels. I mean, the fact that it's done these numbers, the revenue is up that much and the profitability is nearly doubled on it, and yet in the last year it's only up 16%. It's crazy. Year to date, it's up 17%. You know, this last year really has only come from this little bump up in the last kind of couple of months. I mean, how do you double your profitability then only go up 60%? And I know you could argue the case that like, oh, because of the business model, it's like open to like the vaping space, and that's got like potentially a lot of regulation in it, which is like, yeah, fair enough. So, you know, you put it at a bit more of a discounted value, you go like, it's doing premium numbers, but, you know, let's put it at the market average valuation of 20 times earnings. In fact, let's not put it at 20 times earnings, let's even discount it more to factor in that risk of vaping. And then you start taking it to down like 15 times earnings. Let's even take it down to like 12 times earnings. So we take it down to 12 times earnings, and yet it's still massively undervalued, and especially when you look a year out, and if they drop down to 6 times forward earnings, like surely a company doing these numbers should at least be 12 times earnings, and that's factoring in a very discounted market multiple for a premium business. I don't know. I saw the numbers yesterday, and I saw the share price, and I think the share price was up like 2% yesterday. Or was it 3%? I don't know. It was hardly up at all. I was like, how is a company doing these numbers and yet it's not going up on these numbers? So yeah, it is what it is. Anyway, you think those two stocks are doing crazy moves? We get on to Meta stock. Absolutely crazy. The stock is down 13% now in pre-market. It was down a little bit more. And I'm not going to lie. Yesterday I was out. I was out for a meal yesterday, and one of those that you're trying to like be involved in the conversation and trying to be social, but I knew Meta reported earnings, and I was waiting for the notification to come through, and I saw it come through, and I thought, I'm going to quickly have a look at the earnings, and I had a quick look at the earnings, and I saw, right, EPS beat by 0.39. I went, wow, that's a mega beat. That profitability is really ramping up. Revenue beat by 240 million. I went, wow, that's good. 27% year-over-year growth. I saw the notification. I was like, wow, that's going to do really well after those earnings. And I put my phone away. I just thought, yeah, those earnings are really good. And then I got a notification through, and I don't know if it was Trading 212 that put it through. And it said something like, Meta stock up 50%, or I assumed it said up 15% because I thought the stock would be up on these earnings. So I was like, wow, the market really liked it. Up 50%. I thought it might be up, but I didn't think it'd be up 15%. So I was like, wow, I was feeling good. I was like, Meta's, good EPS beat, good revenue beat. I'm getting notifications saying the stock's up 15% now. And it wasn't until I got in late in that night that I was like, I looked at it and I was like, hold on, this is down 15%, and I had to go back and look at the numbers, and I was like, hold on, they've done these numbers and yet the stock's down. I had a good 10 minutes going, what's kind of going on here? And it was one of those earnings, and it reminds me of the old DraftKings days. Any of you guys that were DraftKings shareholders in 2021, 2022, you remember when the stock kept bringing out really good earnings and the stock kept dropping, and we were all looking at each other going, why is it down? It didn't make sense. And eventually it got the reflection on the share price, but there was a time where it was frustrating. And it was like that with Meta. I was looking why has it gone down? I was trying to find a reason why it went down. And I could see it in the comment section, everybody was kind of going, why has it gone down? Nobody could find a concrete reason why the stock's gone down. And that's always a sign that the move was stupid. Meta's earnings were a good 9.5 out of 10. And when you try to scramble for a reason why it went down, that's a sign that it probably shouldn't have done that. Now, a few people have been pointing to lighter guidance. The guidance wasn't that light. What companies always do is they kind of temper analyst expectations, so they set themselves up for beats in the next quarter. Doesn't justify a 10% drop. So, yeah, that wasn't a reason why. A lot of people now pointing out to this, that the capital expenditures will be in the range of 35 to 40 billion, increased from 30 billion to 37 billion. Same again, yeah, it's a bit of an increase, but it's not that much when you look at the profitability they're throwing off. It's not big, that much of a big deal. And you look at what they're expecting. Some of it was to expand into the metaverse, which, I'm not a big fan of that, but when you're a company that's thrown off this profitability, go for it. It's not that much of an issue. And some of it was to invest into the AI, which I think is fine. That's going to be a major growth. Invest for the future. And you got to remember, AI has been one of the big drivers. The big investment they made was to help with the AI, the Reels, and Reels is now really combated with TikTok. So one of the reasons why they're having so much success on the profitability is because of some of the investment they've put into the AI previously. So there's nothing wrong with reinvesting into the business, especially when you're making this profitability. A lot of people lost the crap in Meta when, they spent way too much. But if you're only spending a bit more, that's all right. Nothing's wrong with that. And then I started digging into the numbers, and 27% revenue growth. Cost and expenses. Like I said, the revenue profitability is ramping up way more than the cost of the expenses, which is absolutely fine. Income operations up 91%. Net income up 117%. Diluted EPS 114%. Ad impressions, once again, that was up 20%, so they're really focusing on adding more ads in, where the average price of ads was up 6%. So we started to see a recovery in the price of ads, but people, this is one mistake I always see people make. People say oh, advertising's coming back because you look at Meta's earnings, and people don't realise the reason why Meta does so well is that not because people are paying more for adverts. The reason why Meta's done so well is that they show more. And the way they're doing that is also monetizing Reels a lot more now as well. Sometimes people don't realise that. People sometimes look at that and go, why is S4 Capital still doing bad when Meta bringing out these earnings? Well, it's not that the advertising environment's recovering, it's just that Meta are showing more of them. That's why they're doing so well. But what was promising is that the price of ads did increase 6% year over year. That's I think that's the best number I've seen for a while. So there is a little bit of recovery there in the ads going on, which I thought I'd also mention out here. But yeah, overall, I was like, I don't want to go too much into the numbers because on the Patreon, we're going to do a full breakdown of the earnings from this week on the weekend, probably Saturday or Sunday. So I'm going to give a lot more detail into the Meta earnings there. So I don't want to go too much into detail today's video, but I just wanted to give you a quick couple of numbers here just to say how look how good these numbers were. Overall, it was fantastic. It was a really, really good earnings report. And then you look at the stock price and you're like, it's down like 30%. You know, why is that happening? Like, you know, when you see these numbers and these beats, you know, surely the stock should probably reflect it on the share price. But technically, you know, if you do look at the share price, it has kind of reflected it in. You know, you still look at the year to date, it's still up 42% year to date. And even with a drop in today, to be fair, it's still going to be up a lot more, you know, a good 30+%. You know, in the last year, it's still up 137%. So I think really the reason why it dropped is that it just needs a cooling off phase. You know, it's been a hot stock, it's done really well, and it just needs a bit of room to breathe. That's the reason why it dropped, and nothing more than that. I mean, it is frustrating when you see like a company like Tesla, and they brought out absolute stinker earnings, and that goes up, and then Meta brings out these earnings and it goes down. Like, it's one of those where you go, make it make sense. It doesn't make sense. You know, it's one of those. It is frustrating sometimes because it, you know, it doesn't make sense. But that's the stock market sometimes, guys. You have some of those days where you go, why has that happened? Like, it happens in the stock market. And sometimes I see this, like, people play like earnings. Like, people, like, you know, everyone thought Meta were going to have good earnings, which they did. But then, you know, sometimes the market does the opposite to what you think, and it goes down. Everybody thought Meta were going to have good earnings. I thought they were going to have good earnings, and they did, to be fair. But the share price reaction is totally the opposite to what you think. And then you have something like Tesla. Everybody thought Tesla's earnings were going to be horrible, which they were, and then the stock goes up. And it shows you, you know, sometimes I think people try and play sometimes earnings, and it's like, no, this is why you got to go for the long term, guys. Long term, it will reflect the financials. Short term, anything happen. Anything can happen. And it's like people that say, like, look at some charts, they go, oh, this pattern's here, so it's going to go there. It's like, I saw no one predicting that Meta were going to go down off these earnings, and that's what happened here. And so yeah, obviously, you know, something to be careful when if you are in that short term game. But yeah, overall, you know, stock market, guys, you have those days where it doesn't make sense, and the last 2 days has been proof of that. But overall, yeah, I won't panic at all about this. You know, it's just having a bit of a breather. And if anything, you know, if you're not a better shareholder and you've been on the sidelines for a bit and you've been like, oh, I wish I had better. I mean, realistically, the numbers have just done. I mean, what's it trading at on a forward basis now? Is it like 24 times forward earnings? I think it's even a little bit less than that. It says 24 times forward earnings. I think it's even less than that. You know, for a company that's at 24 forward times earnings doing these numbers, it's pretty impressive, guys. And if you ever wanted a drop to maybe get in there, I don't know, it could be tempting anyway. I actually had to consider, like, do I buy a bit more shares in Meta after this drop. I decided not to in the end, but I had a bit of a think on it after these numbers and that drop. I thought it was way too overdone. But yeah, crazy day, guys. Crazy day. Crazy things happen in the stock market short term, guys. This is the last 2 days has been the biggest prime example why you stay long because these short-term things can happen, and it doesn't make sense. It doesn't make sense, but it happens. And I think that it's probably just a breather because the stock's just been so hot at the moment anyway. So, yeah, hope you enjoyed the video, guys. And if you want a bit more of a big, full breakdown of Meta, a bit of a breakdown of the conference call, I'll do that for you guys on Patreon on Saturday, Sunday anyway. So, yeah, hope you enjoyed the video, guys. See you in a bit.